Hey everyone, welcome back to Corporate Decoder, the place where we crack open company secrets, and today we've got AMREP Corporation, a company that deals in land development and building homes, and their latest quarterly report, which is like a peek under the hood of their business performance for the latest period. So what story do these numbers tell us about AMREP? It's a tale of mixed signals, with some areas showing growth and others facing headwinds, and we are going to dig into the financials to see what it all means. Let us get right into the heart of this report, the financial statements. This is where we see the real juice of how the company is doing. First up, we look at the balance sheet. This is like a snapshot of what AMREP owns and owes at two different points in time. On the 31st of October 2025, their total assets were around $140 million, a slight increase from about $133 million on the 30th of April 2025. This growth in assets is generally a good sign. They held about $44.6 million in cash and cash equivalents, which is up from $39.4 million. Having more cash on hand is always a positive for any company. Their real estate inventory also saw a modest rise, showing they are investing in their core business. The total assets increased from $133,776,000 to $133,000 between April and October of 2025. This growth is mainly fueled by an increase in cash and cash equivalents and real estate inventory. On the other side, their liabilities are quite small, about $4.1 million. This is very good because it means they do not owe a lot of money compared to what they own. Their shareholders' equity, which is what the owners of the company have, stands at about $136 million. This shows a healthy balance. The total liabilities and shareholders' equity matches the total assets as it should, confirming the balance sheet balances. Now let's move to the statement of operations. This tells us about their performance over a period, like how much money they made and spent. For the 3 months ending the 31st of October 2025, AMREP reported net income of $1.2 million. That is a significant drop from $4.0 million in the same period last year. Looking at the bigger picture, for the 6 months ending the 31st of October 2025, their net income was $5.8 million. This is also down from $8.1 million in the same period of 2024. This shows a clear downward trend in profitability. Land sale revenues, which is a big part of their business, took a big hit. For the 3 months, it dropped from $5.8 million to just $825,000. That is an 86% decrease. For the 6 months, it went from $15.2 million down to $8.3 million. This is a sharp decline and likely a major reason for the lower profits. Home sale revenues, however, showed some strength. For the 3 months, they increased from $5.3 million to $7.7 million, and for the 6 months, they grew from $14.3 million to $17.2 million. This is a positive sign for their home building segment. Overall, total revenues for the 3 months fell by 21% from $11.9 million to $9.3 million. For the 6 months, total revenues decreased by 12% from $30.9 million to $27.2 million. So while home sales are up, the big drop in land sales is dragging down the overall picture. It is not just about revenues though, we also need to look at costs. Their cost of revenues also saw some interesting shifts. For land sales, the cost decreased significantly, which makes sense given the lower revenues. For home sales, the cost increased, which is also expected as they are selling more homes. The land sale cost of revenues net for the 3 months and 6 months ended the 31st of October 2025 was $168,000 and $2,521,000 respectively. This is a big drop compared to the prior year. Home sale cost of revenues, however, increased to $5,831,000 for the 3 months and $13,000 and $12,000 for the 6 months. This aligns with the increase in home sale revenues. General and administrative expenses, which are the costs of running the company itself, increased slightly in all segments. This is typical as companies grow or face inflationary pressures. This all leads to operating income. For the 3 months, it dropped from $3.1 million to $1.1 million, and for the 6 months, it fell from $7.2 million to $8.1 million. The income before income taxes reflects this trend decreasing significantly. The income tax situation is a bit complex. In 2024, there was a notable benefit from income taxes, partly due to some reclassifications related to a pension plan. In 2025, they are showing a provision for income taxes, meaning they are paying taxes on their income. And finally, all of this leads to net income. As we saw earlier, net income for the third quarter of 2025 was $1.2 million, down from $4.0 million in 2024. And for the first half of the year, net income was $5.8 million, down from $8.1 million. This decline in net income is the most crucial takeaway from their operations. Now let's look at cash flow. This shows how much cash AMREP generated or used. For the first 6 months of 2025, they had $5.2 million in cash provided by operating activities. This is down from $10.5 million in the same period of 2024. This decrease in operating cash flow is directly linked to the lower profits we just discussed. The decrease in operating cash flow is largely due to changes in their real estate inventory and investment assets, which means they have more cash tied up in those assets. Their investing activities show they used $80,000 for capital expenditures in 2025 compared to $120,000 in 2024. This is a relatively small amount and indicates they are not making large investments in new equipment or property. Financing activities are also very small, with just a few $1,000s used for debt payments. This suggests they are not taking on new debt or paying off a significant amount of existing debt. Overall, the increase in cash and cash equivalents for the first 6 months of 2025 was $5.1 million, down from $10.3 million in 2024. This slower pace of cash generation is another reflection of the tougher business environment. Looking closer at real estate inventory specifically, it increased from $66.7 million in April 2025 to $68.5 million in October 2025. This rise in land inventory is likely from continued development efforts. Investment assets also grew from $14.8 million to $16.3 million. This could be due to acquiring new investment properties or an increase in the value of existing ones. The statement of shareholders' equity shows how changes in stock and earnings affect the owner's stake in the company. For the 6 months ending the 31st of October 2025, net income contributed $5.8 million to equity, while in the same period of 2024 it was $8.1 million. Total comprehensive income, which includes net income and other comprehensive income items, reflects a similar trend of decrease. So, what is the story here? AMREP is facing challenges primarily in its land development segment, with land sale revenues dropping significantly. This is affecting their overall profitability and cash flow. However, their home building segment is showing positive momentum with increased home sales and revenues. The company also appears to have a strong balance sheet with low debt and growing cash reserves. The report mentions material delays in municipal entitlements, infrastructure availability, and approvals, which is impacting construction timelines and costs in both their land development and home building businesses. This is a significant risk factor for them. The overall revenue decrease of 12% for the 6 months is a clear indicator that the company is navigating a difficult market. Especially the 45% drop in land sale revenues is a concern and likely tied to the market headwinds mentioned. On the flip side, the 21% increase in home sale revenues for the 6 months shows resilience in their home building operations. This segment seems to be picking up the slack. Their segment profit for land development decreased. However, home building segment profit increased. Now, considering all this, what is my take? AMREP is clearly feeling the pinch from a challenging real estate market, especially in land sales. The delays in approvals and infrastructure are major operational hurdles. However, the company is not standing still. They are adapting by adjusting pricing, offering incentives, and strategically leasing completed homes. The strength in home sales is a major positive. They have adequate liquidity with growing cash. The key will be how they manage the persistent entitlement and infrastructure delays and whether the housing market can rebound to support their land development plans. The company is showing resilience in its home building division while dealing with significant headwinds in land sales. Its strong balance sheet and cash position provide a cushion. Investors should monitor the recovery in the land development sector and the company's ability to navigate market changes. Alright, that is our breakdown of AMREP's latest quarterly report. What is your take on these numbers and what they signal for the company's future? Do you see a clear path to recovery or further challenges ahead? Let us know your thoughts in the comments below. If you found this analysis valuable, make sure to hit that like button. Deeply really helps us out, and subscribe to Corporate Decoder for more dispatches from the world of finance and business. And hey, if you want to dive deeper and discuss this and other findings with our community, check out our Discord server linked in the video description below. Thanks for watching. See you next time.